Hi everybody, welcome back. Sorry for the disturbance. There was some technical issue. I'm not a great person at that. We are back live, and I hope you guys can hear me. Can somebody just confirm it to me? So as I was saying, that the objective of this chat is to discuss what has happened in the market. The format is I'll cover what I see in the market's perspective for the investment team of StaG sees from a market perspective sitting here, what do we expect in the near future and in the long term. We'll cover the major news during the week and we'll open the floor for queries from our investors and audience. It is a pleasure to have you guys here. Just a minute, I'm getting some. The last video was frozen and hence I had to restart this. It's for those who can't see, this is available as a live stream now. If you click on it, you will get it. I can see a couple of people have joined. Thank you. So let's start. So as I was saying, the format is first I'll cover what I see here sitting today for a market on the short term and the long term. Discuss the major developments during the week and then take up the queries of our audience as and what they want our view on. Thank you for your time, guys. Uh, this is a good start to the year with the markets opening in the green on the first week itself. This should give confidence to the market participants, especially the way the last 3 months have been. Before we get into our view of the year, I think it's very important that I cover what we did last year. Last year was a huge milestone year for Team Senora. We launched our own AIF Cat 3 StaG, and hence this presentation comes under StaG as a as a brand. StaG is a Cat 3 open-ended long-only India-focused fund which aspires to invest in only large caps broadly with those above 25,000 crore market cap companies. The idea is to generate healthy returns with stability and growth for our investors. 2024 was also a wonderful year for our strategy. During the year, our strategy yielded a return of 22% pre-taxes, pre-fees, and pre-dividend versus 8.8% for Nifty. That's a whopping outperformance of 13% plus. This outperformance came purely because of our ability to find winners and avoid laggards. For a record, we actually didn't have a single entry or exit in the portfolio during the year. The portfolio remained the same all throughout the year. Two of our stocks, Bharti and Zomato, contributed most with 5% each to the growth in the NAV, rather more than 5%. Four of our stocks contributed negative returns out of the 16, but the combined pull down by four of them together was only 1.15% for the portfolio, which meant that our losers didn't hurt the portfolio much while the winners added to it. Having said that, the last year started itself, we had guided for a 20-25% return on the portfolio, and we have delivered that. And starting this year, I believe, given the way the valuations are and given the way the economy is, we should beat this performance in terms of returns to our investors this year also. Last year saw the markets in two halves, where the first half was very good for the markets upcoming to the elections. And post general elections, we saw a nosedive in the government spending and hence earnings and hence the confidence of investors. This combined with what was happening on the global macro side in terms of the US investors and in terms of the global macro led to a further decline in the market sentiment. As a result, the market tanked roughly 10% in the last quarter. So, but we ended the year with a 8.8% increase on the Nifty. This year, we are starting with I will say, a lower expectations because the earnings has been a miss for the last couple of quarters. We believe that this quarter onward, the earnings will turn around and we'll see more of it in terms of the growth in earnings and India story continuing to realign with the growth concept which we have. This week started on the positive note both for the markets, with the market being up 1.5% in the new year. I think it was backed by the fact that auto gave a very good numbers with most auto stocks doing well as the auto sales number for the month of December was good. This after a strong follow up in October and November was was slightly not that expected, but it came out quite well, which gives the confidence to the market that probably the consumption story is getting back on the track. During the weekend, we got the quarterly business update from banks, including HDFC Bank, Bank of Baroda, PNB, and few other regional banks, uh, RBL included. This numbers, while on the face of it, doesn't look as good as it was the last quarter, but we have only seen few of the banks reporting. The larger ones have not reported yet, like the ICICI and SBI. We do not give business updates on a quarterly basis. We are waiting for access to do that among the portfolio companies. I believe this quarter is going to be very interesting from the bank's perspective. The moderation in the growth of advances to 2.5-3% QOQ growth is not bad. But what we could see is a differentiation, a difference between the men and the boys, with good banks continuing to show healthy growth. On the CASA side, we have started to see the difference between a bigger player and a not so bigger player. As the smaller players struggle for CASA, we expect the market share in CASA to move to more established players over a period of time. Uh, we saw business update from DMart, which was very healthy. As a result, DMart was up quite handsomely on Friday. Another fact that probably the urban consumption, the commentary around the urban consumption being weak is probably not that a issue as much as we have been hype about. Broadly, our expectation is that the results this quarter will be better than the last quarter, leading to more earning upgrades, and we will see a trend continuation in the next quarter as we end the FY25 on a higher note. Senora believes that the market, large Nifty, which is at sub around 22 times TTM earnings, is at a favorable risk reward, and hence, when the earning comes, you will see a much better market returns. As a strategy, we continue to believe that we can give 25% CAGR return to our investors with through our smart investing, identifying where earnings will come, and continue to grow accordingly. The trend which we are going to watch in the upcoming weeks and months, I think it will start with the IT earnings season. By the time I speak to you next, couple of IT companies would have come out with the results. I don't expect great from IT companies this quarter because number of working days is much lower this quarter rather, because of the holidays in December. Added to it, US elections, which means a lot of spending decisions would have got delayed, which means the deal wins will be low. So overall, IT is not expected to give a gongo results, but by the time the IT results are done and we see the mainstream consumptions, auto results coming, I expect a better directional results. During January, we'll see the Trump regime taking over from the Biden regime, and we'll see and look for what policies and guidance that Trump gives in continuation and different from what the Biden regime was. This for us will make our world a better settled place, driving the markets into a better mood. Uh, from our earnings perspective in our portfolio stock, we are going to go about earnings from from our top picks like Maruti, ICS, SBI. Along with that, we expect good numbers from Zomato. We expect good volume numbers from cement because our channel checks suggest that cement prices are pretty strong, which means the volume should have been better this quarter. We expect wonderful results from our consumer companies, Jubilant and United Spirits. Both continue to hit 52-week highs even in this debit market conditions. Reliance will be an interesting number while Geo should do well. We are not too sure how much of Reliance retail will be able to cover because the while the festive demand was good, it was not as great as past few years, is what we understand. Uh, Other portfolio stocks like Chola, Indigo, which are our ideal ideation and differentiated ideas, they should continue to do well. That's very brief on the portfolio stocks in terms of what we expect on the earnings without getting into the numbers. I will open the floor for questions if you guys have any. Typically, the idea is to keep the session to 15 minutes to 30 minutes, where for around 15 minutes I give my view, the team of the view around, and then open the floor for any questions. We love to hear any queries, if any, from any of the audience. Else, we will wrap it up here for today. I'm waiting for as the questions get together. I think there's some glitch. I can't see chat option. So we'll end this stream today. See you around, guys. Again.